we'll use an indicator called swing high low support and resistance. We will need to activate the swing high and swing low options in the indicator settings while disabling the other options. Then the inputs tab of swing high and low support and resistance indicator, you will see two settings, swing high strength and swing low strength. By setting both of them to 14, we ensure that the indicator will look for the highest high and lowest low over the past 14 candles to identify a swing high or a swing low. So when the price action breaks out above the green dots, which represent the swing high, it is a strong indication of a buy signal. This breakout above the swing high can be a sign of an upward trend and an opportunity to go long on the asset. To identify a sell signal, we need to look for a break below the red dots that represent the swing low. This is an indication that the price is likely to continue its downward trend and the traders may want to consider opening a short position. But in this entry strategy, we need to pay attention to the breakout conditions as they are crucial for confirming the buy or sell signals. A bullish breakout occurs when the price action breaks above the green dots representing the swing high, but it is only confirmed when two consecutive green candles close above these dots. This means that we need to wait for at least two candles to close above the swing high before entering into a long position. In this case, the first candle may have broken above the green dots, but since the second candle was red, it wasn't a confirmed breakout yet. However, in the next candle, the price closed above the green dots again, and the following candle was also green and above the dots. This sequence of two consecutive green candles closing above the green dots confirms a valid bullish breakout. On the other hand, a bearish breakout occurs when the price action breaks below the red dots representing the swing low, but it is only confirmed when two consecutive red candles close below these dots. This means that we need to wait for at least two candles to close below the swing low before entering a short position. In this example, the bearish breakout has been confirmed as the price has closed below the red dots, which represents the swing low. Furthermore, the next candle also closed below the dots, indicating a continuation of the bearish trend. One of the most common mistakes that traders make is relying on a single indicator to make trading decisions. While using one indicator may provide some insights into the market, it is always better to confirm the signals with one or more additional indicators. Therefore, in addition to using the swing high-low support and resistance indicator, we will also use the squeeze momentum indicator to confirm our buy or sell signals. The squeeze momentum indicator is a powerful oscillator that helps traders to identify momentum of the market. To use the squeeze momentum indicator, we will need to make some changes to its settings. So in the settings of this indicator, we will change the BB length to 25 and the BB multi-factor to 0. Additionally, we will change the KC length to 25 and the KC multi-factor to 2.5. After we have made these changes, we will disable the second plot in the style section of the indicator. Then we will change the color 0 and 1 to green and color 2 and 3 to red. The squeeze momentum indicator works by generating histogram that represents the momentum of the market. If the histogram is green, it is a confirmation of buy signal. And if it is red, it is a confirmation of sell signal. By using the squeeze momentum indicator to confirm our signals, we can increase the accuracy of our trades and reduce the risk of losses. In this example, we have identified a bullish breakout, which means we are looking for a confirmation signal that supports the buy signal. So we turn to a squeeze momentum oscillator and observe that the histogram is green. This green histogram is a confirmation of the buy signal and indicates that it is safe to enter the trade. In this example of trading, there has been a bearish breakout, which means the price of the asset has fallen below an important level of support. However, it is important to verify the signal using additional indicators such as the squeeze momentum oscillator. After checking the oscillator in this scenario, we can see that the histogram is red, which indicates a strong bearish trend in the market. Therefore, we can confirm that it is a good time to consider entering a short trade. To fully confirm the signal generated by this trading strategy, we can use the 10 and 1 different moving averages indicator. This indicator can be easily added to the chart from the indicator section. To customize this indicator, we need to access its settings and in the inputs tab, set the type of the moving average to RMA. After that, we need to change the period to 150 and set this option to HL2 to make the indicator more visually appealing. We can also customize its colors and thickness according to our preferences. Now we have created a precise trading setup to minimize the potential losses from past trades. The rules for entering and exiting trades in this setup are as follows. To enter a buy trade, the first condition that must be met is a bullish breakout. Once this occurs, the squeeze momentum oscillator should be checked for the first confirmation, so the histogram of this oscillator should be green. The final confirmation is then made by ensuring that the price is above the RMA 150. Once these conditions are met, buy signal is confirmed and we can enter the buy trade at the close price of the signal candle. It is important to set a stop loss to manage the risk in case the trade goes against us. There are 3 options to consider for a stop loss: the red dots, the last swing low, or the RMA line. We should choose the option that is closest to the entry price. Finally, we need to set a target for our trade. This should be 1.5 times greater than the stop loss value. By doing this, we ensure that we have a good risk to reward ratio for our trade. To enter a sell trade, we wait for a bearish breakout to occur, indicating a potential downward trend. Next, we look for confirmation from the squeeze momentum oscillator, which should show a red histogram indicating a strong bearish momentum in the market. Finally, we need to confirm that the price is below RMA 150. Once all these 3 conditions are met, we can enter a sell trade at the close price of the signal candle. There are 3 options for setting a stop loss. We can use the green dots as a reference point, or we can set the stop loss at the last swing high of the market or place it at the RMA line. Choose the option that is closest to the entry price. We also need to set a target for our trade, which should be 1.5 times greater than the stop loss value. This helps us to ensure that our potential profits are greater than our potential losses. By using this trading setup, we can potentially increase the likelihood of successful trades while minimizing our risk. Now we have seen the complete tutorial of this trading strategy. So now it is important to examine how it performs under different market conditions. To do so, we conduct a backtest on Ethereum chart and 5-minute time frame, executing 100 trades based on this trading setup. In our backtest, the win rate was 69%, and additionally, this trading strategy generated a profit of 207%, which is a remarkable return on investment. But if you're looking to recover from the past trading losses, I highly recommend watching the next video that can help you minimize your losses and increase your chances of success in the long run.